What's up, guys? You know what an FVG is, you know SFPs, you know POIs, you know Delta, and you watch like 200 hours of trading content, but the second you sit down at the open, it all turns to mush in your head. And that's a real quote from a student of mine in the Discord who just recently joined, and honestly, it's one of the most accurate way anyone has ever described the intermediate trader plateau. Now, here's the thing, you don't have a knowledge problem, you have a sequencing problem. You know all the pieces, you just don't know what order to look at them. And 3 steps fix it: mark, and read. That's the whole system. So lock in, and let me describe the exact moment you're stuck in. You sit down, you open the chart, and within 30 seconds, you can spot everything. Order block here, fair value gap there, a swing low, an untested POC, weekly VWAP, previous day high, and you see all of it. Your eyes are trained. But then you freeze, because you can't decide which level actually matters. You see a setup forming at one, and a setup contradicting it at another. Your brain's processing all of it parallel and outputting nothing. That's a scrambled state, and it's not a knowledge issue. You just proved you have the knowledge by naming 30 things in 12 seconds. The problem is you try to judge everything at once instead of in an order. Well, here's the order. Step 1. You have to define whether the market is in a range or a trend. And you can look at the examples right here. This is how a trend looks like, and this right here is an example of a bullish trend. This one is that of a bearish trend, and this right here is what a range looks like. And honestly, for a range to rotate from the high to the low, it still has a trend. As you can see, it forms sequential lower highs, that is here, and lower lows. And for an uptrend, for it to like go all the way back up, it still has to follow that structure of a low and a higher low and then higher highs. And you have to understand which sequential structure of the market you're in. And let me show you an example from a live chart. Now, this right here is an example of a live chart of mine that I am currently watching at the moment. And today is August 9th of the time that I'm recording. And as you can take a look here, I have defined my range structure pretty well. And if I hide out all of the components on my chart and really just show it to you guys where and how I understand what sort of structure of the market I am in, I just make sure to mark out the trend for myself, the higher time frame structure. And as you can see here, we had a top here, we had a pretty nice SFP, which I will explain the entry models by the end of this video. And for me, it looks like it's slowly trending down, and as you can see, it has continued to form lower highs, and it is still on the path to form another lower high. Now, I know that it's in an overall trend, but on the lower time frame, on the mid time frame, it's currently ranging at the moment. And I'm going to mark out my ranges, and I'm going to see like how the trends have formed. The trend, especially for sells, are usually very aggressive on this pair that is BDC for our chart. And as you can see, market pretty much trends only 20 to 30% of the time, and 60 to 70% of the time it is doing nothing but ranging. Even right now it is ranging, and as we can see, it's around the premium of the range. If we mark a 0.5 of this range, anything above the 0.5 is supposed to be the premium, and below is supposed to be the discount. We look for longs into the discount, and we look for shorts into the premium, as there are more sellers active in premium and more buyers generally active in discount. And that's how we are able to deduct which phase of the market we are currently in. And if you go to the lower time frame real quick, we will be able to see that the market itself is ranging all the way from this pivot where this level exhausted the trend that we were working with, and from that point on we have just been rotating around this mean, which is the start of the volume profile we always mark. You can actually go to my free course that I've uploaded on my WAP, and you can access it, and you will see how we mark out the volume profiles. And taking a look here, there is another range that I can mark out right here. This is the exhaustion pivot of another trend that was to be, and we can mark out our volume profiles for these ranges. Those are the levels I look for. And now that we have our ranges marked out, we can take a look at whether we are in a premium or whether we are on a discount. As you can see, we are in the premium of the range, and we are currently rejecting from the value area high, which is supposed to be our short POI. We also have some highs holding around here. Now that we have covered for ourselves what phase of the market itself currently is in, we are going to go to the lower time frame and deduct our entries. And there are 4 entry models that I will show you in a second that helps us determine our entries on a certain POI. Now, these right here are our 4 entry models, and honestly, anything that's other than this entry is just a variation of these entry models. As you can see, the first one is the SFP, the swing failure pattern, and this is an entry model model that happens once we are not able to get over a specific swing high or a swing low. And if we SFP that, we just spike through it, we are able to get our entries right around that structure. And breakdown and rejections after that sweep is generally where we put our entry, and our stops are usually at the high. Now for market structure break entry, as the name suggests, we wait for the structure of the market to break, and then we look to enter right around where we can see there is usually a POI within it, or we can even enter the break structure, which I will explain further in my videos on how the 4 entry models work. For the continuation entry, we usually look for TWAP structure. Now TWAP is a form of executing order, which is also referred to as time weighted average price, or a structure with multiple higher lows and multiple higher highs. And in that structure, we look for any sort of trigger on the lower time frame into the entry, and we just ape on that, and our stops are generally at a prior higher low. And for consolidation or range entries, we generally look to long the discount, and we look to short the premium. And the way we actually like mark out these entry models and how we are able to really just execute them on the lower time frame is something that I will show you in a second. Now this right here is the lower time frame of the chart that I was showing you guys, the 4-hour chart of mine. And coming to the lower time frame, we are able to deduct some things off of here. Right off the bat, we have a swing high and we have a swing low, but we also have to take into consideration that this swing low has been pretty much trending higher, as this looks like a continuation setup. As we remember, the continuation setup looks exactly like this, a sequence of higher lows and higher highs, and then we have been continuing this higher trend pretty well. And I've managed to take some longs around here and longs around here, which I shared in my Discord live. Now taking a look at this structure right here, knowing that it is Saturday and price usually chops on Saturday, what we're gonna do, we're gonna deduct that this could be an inducement, sort of an SFP setup, but internally. So it's basically an internal SFP setup into an external continuation setup. And I told you, like any sort of entry models is just going to be a variation of all 4 of these entry models. So I'm just gonna mark this POI as a continuation POI, and I'm gonna mark this specific structure right now as an SFP structure. And as you can see, this breakdown right here that is happening is what we refer to as the market structure break entry model, which is that the high usually breaks higher, but eventually it forms a low and it starts breaking that low. And as you can see, we have not managed to really get over the high anymore, and we are just holding the highs, which generally shows exhaustion, which is that prices or buyers are not willing to buy anywhere above these highs and are getting overpowered by sellers, which leads to more breakdown, which again, that break structure entry is a market structure break entry variation. And the way we look for our TPs is we look for usually an FVG, which is again like it will continue to hold low, which is again a variation of the continuation entry model. It could hold low here as well, but if it does not decide to hold low right here, what we will observe just continuation of breakdown and breakdown. That right here would be a continuation of this SFP model of the sellers. And this, all of this combined is what we refer to as lower time frame or microstructure, and how we label our trade. So let's just say that we get a break structure right here. We are gonna I'm gonna mark out the break structure, and if we get a break structure right here and the high keeps holding, I'm going to put my stops above the swing high, and I'm going to go aim for wherever the higher low gets formed. And we usually always go for a minimum of 1.5 hour or 2 hour minimum, but we also have a low that is formed right here internally, because the higher low of this 15-minute structure that we have is right around here. So we do have some leeway that we are going to come into this FEG and bounce back up from here, which is some sort of a setup that we can actually look for. Now that we have narrowed down pretty much the higher time frame outlook, the lower time frame, the entry models, and how we are able to actually execute based off of microstructure, this is exactly how we are going to like base off of our trades. And this is what I refer to as a 3-step fix. That is, mark out the higher time frame, mark out the lower time frame, and then take a look at or read your entry models and then read the microstructure, and then you're able to label out and really just look for execution. And now all that's left is you go on Bybit or whatever exchange you're trading and just execute your trade. And there are some ways to like manage your risk and manage your entry after the trade has been filled, and those are topics for other YouTube videos which I will discover later on in the series that I am posting like every single Tuesday and Saturday, these YouTube videos, and everyone will benefit off of these. Now drop a comment with the step you skip the most, and most of you skip step 2 probably because you mark too many POIs. What you have to do is narrow down the POIs to only 2 levels where you are able to look at and be like, okay, I'll short here, and if price comes here, I will long here. More confidence is not what you need, and if that's you, comment step 2 and I'll go deeper. Thank you guys. I will see you in the next one.